Hey, what's up everyone? Welcome into the channel. My name is Brent with Investing on the Go. Today we're going to be covering Fidelity trade and option recap for July 26th to the very 1st of August. So July is now behind us and August is upon us. So we're going to go through the complete trade and option walkthrough of all of the stuff that we did this week and kind of breaking it down as to where we bought, sold, etc. So stick around, we're going to lot to cover. So if you guys are brand new here to the channel, I would really appreciate if you go down below, smash that subscribe, smash that thumbs up. It really does help out the channel. Also, drop me a comment down below if you guys did any options in the month of July or last week and let me know what you traded on. Okay, with that said, let's go ahead and get into it. So our covered call strategy from last week going into this week, let's go ahead and start off with our last week open call. So last week we had one open position at the very end during our recap. We had sold on the 23rd, we had sold a call option on the S&P 500 with a strike price of $741. We had collected $589.32. That was going into this week, right? We had the Fed meeting on Wednesday we were looking forward to. We also had earnings on Wednesday and Thursday. So this week we had Meta, we had Apple, we had Amazon, we had Microsoft releasing earnings. And we were monitoring all of these earnings, plus we had the Fed coming out. So we knew that there was going to be some volatility this week, and we were going to be taking advantage of that for the option. So early on this week, as we said, early on in the early portion of the week, the S&P 500 essentially opened near 744, climbed to 745 right off the bat, smacked at 745.50, and then immediately kind of took and sold off here. Within an hour of SPY opening up, it sold off from 745 all the way down to about 737. So we used this opportunity. It did eventually bottom out here during the day, right around 735. You can see it kind of hit here, 735 intraday on Monday. So we kind of had some resistance overhead right around 745, and we had some technical support right around that 735 level. So that was our early Monday overview going into the week. Now, during the early week, we were able to quickly close and reopen a covered call. So during that little fall in the morning where the S&P 500 opened at 745 and fell down to 737, we were able to buy back that call option. So we had sold it at 589. We quickly rebought it back for 485.66. So that was a profitable one there. And then we were waiting for that reopening. So we can see here the SPY, while it did open up at 745, took down all the way to 735. We did eventually close out that call option, netted a little over $100, waited for a little bit of a recovery. Obviously we were going to be pushing back up towards 745, so I was able to resell that same call option for 515 and netted that difference. Now as the market continued going into Tuesday, Wednesday, we did see that the S&P 500 began to kind of stagger out a little, kind of put it out. Instead of coming back to 745, it reached about 741 and began to trend sideways in this range. So we went ahead and during this time frame, I had 53 other shares outside of my call option that I wanted to use during this time frame as well. So we were able to liquidate 53 of our shares at a price of 741.60, and we waited and waited and we waited for the next day for the Fed announcement and for some more volatility after earnings, and we were able to do that quite well. So we sold here at 741.60, and we set our limit buy for 737 because that had been the previous low where we had found support. So I just kind of set a limit buy of 737 and let it ride. So we sold here 741 and repurchased at 737, rebuying back more shares, but the spread between them netted us $242.99. Now we can see here the midweek Fed drop. So the S&P 500 had actually done a little bit of a recovery play here and had gone all the way up to around 742. This is even during the Fed's announcement. It wasn't until about 15, 30 minutes after the Fed made their announcement that the S&P 500, the Nasdaq, and other indices sold off pretty heavy. It fell from 742 all the way down to $729.10 and closed near those lows there on Wednesday. During this volatility, we were able to close out our option that we had sold on Monday. We did pay $140.66 to close it out. So if you guys would like to do the math there, we'll do it towards the end here. But that was another profitable call option that we were able to perform in the middle of the week. And while we close out this call option here, we left it. We didn't reopen anything. We were waiting for that recovery play to bounce back, more closer to 737 or 740 before we rewrite the call option again for a higher premium. So the rebound, as we said, what exactly happened on Thursday? The market gapped up, nice recovery. After Wednesday, we had earnings of Meta and Microsoft. Meta tanked, Microsoft did really well. And it says, right in here, Meta had fell, Microsoft climbed. After hours on Wednesday, Thursday, it recovered. So we redeployed towards our 741 strike price, and we were able to net another premium of $199.32. And then we waited once again throughout the day. Here you can kind of see, I believe I sold my call option right in this time frame, right around 740 at a strike price of 741. And I waited after hours on Thursday. Once again, we did see after hours, Apple fell this time and Amazon climbed. So we had 4 of the Mag 7 companies go through earnings this week. We had Meta, which fell, Apple, and which fell. Then we had Microsoft, which climbed, and Amazon. Then we had Microsoft that climbed and Amazon that climbed. So it was one up, one down, one up, one down. And all in all, the market did have a bit of a staggering out on Friday at open. So early morning retest we had posted in the Discord server. I was looking for a retest of 737 support. So during the support, I knew I didn't want to be in my call option. Otherwise, more than likely with the good earnings from the good run up from Amazon and on Microsoft, the market was more than likely to continue rebounding towards that 744, 745 level in the later day of Friday. So what we did, as soon as it was moving down towards 737 and I was able to get, below my initial premium, I went ahead and quickly closed out my contract at 741. And guess what happened? The S&P 500 came down, touched 737, and then zoomed back higher towards 748, 750, nearly towards the end of the day. So here, I just closed out that call option that I had sold previously at 199, and I was able to close it out for 135. So while it wasn't a whole lot of profit, I was able to profit from this call option and keep my shares from being called away at 741. That was the main goal here. Now, I was a little bit trigger happy this week, and we did have prior resistance at 745 at the early portion of the week. And we do have a lot of things currently behind us or in front of us right now. The Mag 6 are now behind us. This includes Tesla, Google, Microsoft, Meta, Apple, and Amazon. Those are 6 of the biggest companies in the United States, have all reported earnings, and their earnings have been priced into the market now. But we have war continuing to escalate. Now, with this in mind, that the war isn't going to stop anytime soon up until, whatever happens, we have the yields, the treasury yields are continuing to climb. The dollar is making some adjustments. Our future rate increase is being more likely to potentially happen here, I believe in either September or December timeframe. I went ahead and struck a strike price of 744, 745. So here, as the S&P 500 was rebounding there on Friday, it did kind of stagger out within the 745 range right in here before, climbing higher towards the end of day. But with that in mind, if I did a strike price kind of in the middle of where I felt comfortable, I could net all the premium up front for it to climb above or near 750, even factoring in all the volatility of what's out there in the market and in the world globally, right? So what I did here is I did adjust, right? I had sold my 740, or I had bought back my 741 strike, and it was completely closed, and I was able to profit from that. I did go ahead and raise my strike price from 741 to 744 because 745 seems to be either a resistance point or support point, depending on how the market is going to move forward with volatility. So by the end of day, I did end up writing another call option with the strike price of 744. I was able to net $509.32 from this option. It's open going through the weekend right now, going into next week, right? We have theta decay going on. We saw the news over the weekend that US and Israel are looking to continue bombing larger than they've ever bombed before, infrastructure going on over there. So that's not going to help any situation. And while on Friday at close, the call option that I sold was worth $6.60, so essentially $660. That difference there, I was happy to lock in $509 rolling into the next week, and we'll see what Monday plays out. So we closed on Wednesday here at 729.10. And then we gapped up the next morning, opening up around 735. So are we going to continue blasting up from this point on as if, we have bigger earnings in the future coming up, not as volatile out there with the market, with the war going, expanding, couple things out there to kind of factor into the prices. So I did go ahead and write my call option for this week. So my end of the week SPY sell. Oh yeah, we also had another trade. So as we said earlier this week, we had sold SPY and rebought it a little bit cheaper. We had sold it at 737. So with this week, again, we pushed that 745 resistance as we had earlier in the week, and I did it. So we had sold at 745.65. So here, this is my previous purchase of SPY, picking up 53 shares at 737. We did go ahead and sell here during that side trend right in through here. We weren't sure if 745 would be holding or if we would be retracting back down into the 740, 737 range with the war and everything right going on. So I did go ahead and sell those 53 shares at 745.65, and hey, that's another profit. But I did reinvest that capital into another company. So Meta drop. We talked about this a little bit earlier. I had previously sold Meta back at $711. Then I had repurchased it and sold it again at $617. So recently, Meta after earnings had fallen from above $600 all the way down and touched $530 on Thursday during market open. Now, they do have some things going on with them, but this is something that can be cleared up pretty easy. Their quarter two revenue came in at $60.8 billion. This is a 28% increase year over year. Their operating cash flow and their capex is what kind of spooked people. So operating cash flow here came in at $31.86 billion. Capex came in at $31.1 billion, leaving cash flow negative by $784 million, down 91% year over year. So these shares fell in the after hours between 8% to 10%, quickly selling off. They also had some legal charges that they were facing as well, and that had initially caused Meta to begin falling initially, and then going into earnings, they continued to fall even further. So I am happy buying Meta and waiting for the recovery play here. This can easily, here you can see my buy price here. I picked up 73 shares at a price of $552.49. I didn't buy it immediately after it fell. I wanted to see some recovery going on here, and we had 1 day of recovery, 2 days of recovery, and then we went ahead and purchased into Meta with those shares that we sold from SPY at a profit. So everything there is in order. So quick intra bonuses. If you guys are not familiar with SoFi, they offer a currently bonus of between $75 and $475 for signing up their SoFi checking and savings account. Right now, they're offering around 3.10% APY. Also, they have an investment platform. So if you sign up for the investment platform, all you need to do is deposit $25 to get yourself started. They give you $25 just for doing that, basically 100% return. We did a whole playlist of investing and depositing $25 on a weekly basis over the course of around 40 weeks. And we were able to invest $1,000 and grow that portfolio sizable, reasonable level within the SoFi investing platform. So if you haven't heard of them, definitely check them out. Easy way to get some bonuses and get started investing there. Okay, so jumping into our weekly cash flow summary. So we have some realized gains and active credit. So early on Monday, we had done that quick 737. We purchased back our call options and then resold the call option. So here we made $103.66 on that quick buy to close on Monday. We waited for that resell and then we closed it on Wednesday after the Fed announcement. The S&P 500 plummeted. We were able to close our call option near that 729, netting $373.66. We waited for the recovery play on Thursday. We sold another call option at 199. Friday, we were able to quickly close it out as it fell below our strike price of 741 towards 737. We were able to close that out for $63.68. These were guaranteed. We made $541 of net realized profit generated across 3 of our completed closed trade maneuvers between 26 and 1. Now, right now we do have one open call option. We were credited $509.32. This is collected by selling the August 7th, 744 call strike price. So it's going to be carried in to the next week. We're going through full decay potentially, or we'll see if the market is ready to break beyond 748, 750, break out of this downtrend and continuing higher as the war is continuing to go on. The big Mag 6 companies are already behind us. Oil is continuing to rise and yields are continuing to climb. Dollar is continuing to do its thing as well. So we'll see how it all plays out. So this week, our total option cash collected, we collected $1,050.32 of total cash premium over on the Fidelity platform. So here is the execution log. Here's our sell to open. Last week, we had this running through. Last week, we collected $589.32. This is the sell to open 5. So we buy to close 5. We profited that $103.66 with the volatility there on Monday. Then we sold to open number 6. We collected $514.32. Now, again, we held this one until Wednesday after the Fed, and then we were able to buy to close 6. We profited there on Wednesday, $373.66. Then we waited until Thursday for the recovery. We sold to open number 7. We made $199.34. Then on Friday, during that dip down to 737, we closed that out with the, we paid $135. We profited that $63.68. And once again, I did get a little bit trigger happy there on Friday, but I was happy selling my call strike with a strike price of 744 at, 510. So at strike price of 444, I'm pricing in, $5 per share, by like 449 would be my high ceiling that I'm getting paid up front for these 100 shares. So if the price climbs to 449 and some change, and I get those shares called away, I still make the profit as if I sold it at 449, but the shares would get called away from me at 744. But with the premium collected, I essentially would have, premium and those shares being sold off. It would be as if I sold them off at 749, which is where our current wall is right now. And we also received a dividend from SPAX Cash. We received $174.47 that we're rolling into the month of August to use towards buying other stuff. Here's our sell number 1. We sold S&P 500 for those 37 shares. We profited, or we got 39,303. Then we repurchased it for 39,061. The exact same shares. We bought and sold the exact amount of shares, and we profited that difference of $242.99. When we rebought, we picked those up at $737. Then over here, we went ahead and sold those shares here at 745 and some change. We were able to profit $457.63, and then we rolled a little bit more than we sold, right? We sold $39,518. We rolled $40,331.77 into Meta at that current price of Meta at 552. So we picked them up at 552.20 or 49. And right now it's trading at 556.47 and potentially continuing to climb going into next week. So that is everything in terms of our execution log. Here is our outlook going into the upcoming week, August 7th. So scenario A, SPY ends below 744. Is it likely? Who knows? We would then collect and keep $509.32 of our cash credit, retaining all 100 shares of SPY and selling another covered call option later into August, continuing to generate weekly income. Scenario B, if my shares get called away at 744, say the S&P 500 pushes 748, 750 and beyond, we continue moving higher, and I do have to sell at 744, well, I do end up collecting $74,400. This is up $300 from last week. Remember, my strike price is 741. We bumped up our strike price to 744, which increases our total sell value. So we also have the premium that we've collected right now. We've collected between the last 2 weeks we've been running options on SPY. We've collected a net premium of $1,781.01. So in total, once I do end up selling 744 my 100 shares plus all the premium that we've collected, and this doesn't include the $200 and $400 that we did the swings with the SPY, we'll still end up with around $76,181 versus our cost basis of these 100 shares of SPY at $74,800. So we'd still end up net positive regardless of what happens, which is our main goal within the Fidelity account. I'm looking at retaining the cash value while selling all options on SPY as we're building this portfolio higher. Eventually, if Robinhood does offer a transfer bonus to move other platforms to Robinhood to collect that 2-3% transfer bonus, I will transfer the capital from this portfolio over to Robinhood, paying down the margin account basically down to, we'll say, 10% or even 0, depending on how large we can grow our Fidelity account. If I'm able to grow our Fidelity account over the course of the next few months to be 125 or 135,000, then we can nullify almost all of the margin over on Robinhood, which is the goal. We'll see how it goes. So guys, that is going to be it for today's video. What is your guys' SPY strategy or option strategy? Are you guys selling any covered calls or puts on Fidelity or Robinhood? Let me know down in the comment section below. Also, let me know what your guys' strike prices are, and subscribe for weekly Fidelity option logs and trade logs. And right now, our goal here on the channel is 7,000 subscribers. So if we're not at 7,000 yet and you guys are not yet subscribed, definitely subscribe. I would really appreciate it. And also smash that thumbs up if you guys enjoyed the video. So guys, that is going to be it from me. I do appreciate everyone for tuning in and hanging out, and I'll catch you guys in the next one. Bye-bye.